The famous Indian stocks which crashed overnight. Good day everyone, welcome to the video of the day. Please note that this video is for educational purpose only, not investment advice. So Infosys, one of India's biggest, most trusted IT companies, crashed over 8% in a single day and hit a fresh 52-week low. ITC, a household name in every Indian home, is down 31% this year. These aren't small unknown companies. These are stocks millions of Indians hold in their portfolios. So what actually happened? Let's break down three real recent falls and the real reason behind each one. Please note this is a factual breakdown of the what happened and why, not a recommendation to buy or sell anything. A stock falling isn't random. There's always a trigger. Let's go through three of the biggest, most talked about falls in India's market this year. So first is Infosys and the entire IT sector. One company is warning everyone's problem. On June 19, 2026, Infosys share crashed over 8%, hitting a fresh 52-week of low of around 1030 INR, down 52 high of rupees 1700 INR back in February. And it wasn't just Infosys. TCS fell over 6%, HCL Tech dropped more than 5%, entire Nifty IT index sank nearly 6% in a single session, wiping out over 1.35 lakh crore in Indian market value in one day. Here's the twist: none of these Indian companies actually announced bad news that day. The trigger came from thousands of miles away. Accenture, a major US IT consulting giant, slightly cut its annual revenue growth forecast from a range of 3 to 5% down to just 3 to 4%. That's 1 percentage point change, but because investors see Accenture as a bellwether for the whole IT service industry, the reaction spread instantly to Indian IT stocks too. Underneath, the single trigger is a bigger worry that's been building over a while. India's top IT companies have been slowing their hiring sharply as concerns grow over how quickly AI could disrupt traditional IT service work. So the Accenture news wasn't the root cause, it was the spark that lit a fire that had been building for months. Now, ITC. When government policy moves a stock, ITC, one of India's biggest and the largest companies and a staple in countless portfolio, is down by 31% year to date in 26. And the reason here isn't the global market sentiment. It's a direct domestic policy charge effective from February 1. The government raised the GST rate on cigarettes, tobacco and pan masala to 40% and added an extra health and national security cess on top of that. Since tobacco products are a major chunk of ITC revenue, the tax hike hit investors' confidence hard and stock has been under sustained selling pressure since ever. This is a good example of completely different kind of trigger than IT stocks. Section 3, KPIT Technologies, a sector specific warning. KPIT Technologies, a mid-sized but well-known auto tech and engineering software company, has fallen 53% so far in this year, one of the steepest declines among Nifty 500 stocks. The trigger there was more specific because the company itself signaled that its financial performance for the year would come in weaker than expected. Combine that with the broader worry hanging over the entire IT and tech service, the AI disruption concern we mentioned with Infosys and KPIT become one of the hardest hit names. What is the bigger picture? Three stocks, three completely different reasons. Infosys, IT sector, single competitor guidance cut, layered and top much on a bigger fear about the AI disrupting the industry. ITC, a government tax policy change could hit the core business. KPIT, company specific weak guidance compounded by sector wide tech worries. And zooming out even further, this year, 20 stocks in Nifty 500 alone have fallen more than 30%. Even with the broader Sensex and Nifty have actually recovered from their April loss, that's a real lesson that the headline index can look fine with individual, even famous stocks are getting hit hard for every specific reasons underneath. The takeaway here isn't the stocks are bad or the stocks are buying opportunity. It's that every fall has specific story behind it. Before reacting to any big stock move, the real question is this a global sentiment issue or a policy change or something specific to company? If this help you understand what actually moving the stocks, hit the button or subscribe. Make sure you like the video, share it with your friends, family, colleagues too. Welcome to Money Brief. Let's grow together. Make sure this video is for informational purpose only and not a financial advice.